So we're gonna go through, and now I am gonna invite, after long overdue, Professor Kathleen Johnston up. And I just want to say what a blessing it was that I was looking for an accounting faculty member to kind of come forward, and Professor Johnston was willing to do that, and not only willing to do it, but actually excited about doing it. So I wanted to say publicly thank you very much. And we might need to take like a 2-minute break. So why don't you go take a bio break, but please be back in like 5 minutes. Okay, I know you're like, yeah. So go ahead, and we're gonna just finish up with this and tell you about mentors, and you'll be gone. All right, 5-minute break, please.
First, I wanted to just say personally, I am feeling very blessed to be a part of this, even though I'm a very, very tiny part. This is just so exciting to see all of you where you are right now. Coming from the classroom, learning all this stuff, and then actually being able to apply it is it's just wonderful. It really is. What I've done, and actually I have to give a lot of credit to my husband as well. I know some of you have him as well. He is an adjunct professor for finance too, or finance also. And we put this together, and it should be a very basic model. So for those of you who do not have business majoring within your background, do not worry, because it really is something that you'll be able to walk through very easily. I think the hardest part of these financial models are coming up with numbers. So that's going to be something that we'll kind of try to walk through a little bit, and this really isn't going to take very long. But this is an Excel spreadsheet that we're going to actually put out there for you. So what's making it even easier is all you have to be is concerned about the yellow. If it's not anything in yellow, you don't have to worry about it, because the program is just going to do it all for you. All right, we're just going to make this very easy. If you look at the bottom, there's some tabs. There's 3: capital, revenue and expenses, and cash flow. So the first tab is the capital, which is what's up there right now. And all you're going to do here is just list the capital assets that you are going to be needing to purchase. Computers, desks, machinery, cars, anything that you can think of, delivery trucks that would actually something you need to purchase for your venture. And it's literally as easy as that. You just put in the listing over here, what the item is, and you identify the cost, and it's actually going to add it all up for you. All right, so that's pretty basic, and that's really all you have to do with the capital requirements. Any questions on that one? All right. The next tab, the revenue and expenses, are broken up to a bunch of different steps. All right, step 1 we just saw was on the capital tab. On this seller tab is actually going to have several steps in here. The first step right here is going to be, again, your step 2. If you just follow them in sequential order, you, again, won't have any problem. This is going to be trying to forecast your revenue. All right, now, again, there are several of you with different types of companies, all right? So you're going to actually have a little bit of a different approach in this section, depending upon the type of company that you are. If you are a manufacturing company, you would really be filling in both of these areas. You'd say, how many units am I planning to produce, and how much am I going to be selling those units for? And then you would just make some kind of assumption as far as your growth from one year to the next. We actually discussed it, and we're only going to have you forecast 3 years worth, all right? Because after 3 years, it gets a little bit more complex, and you might just be really reaching for numbers that are really going to be very temporary anyway. If you are a service or a retail type company, you're not going to have units. So all you're going to do, just like it says in this little explanation here, all you're going to do is just put the number 1 in where it says units. And then you're just going to come over here, and then you're going to just enter in what your annual revenue is going to be for year 1, 2, and 3. So if you're a service company and you're expecting to generate $10,000 in the first year, you just put 10,000, maybe the next year 15, and then after that's going to be 20. All right, so just again, depending upon if you're going to be having units or not. In this area, you know, again, it's so difficult to try to come up with these numbers. One of the suggestions that I would be is maybe, again, kind of looking at a competitor to see where their pricing is. When I first started my CPA practice, I was thinking, well, how much should I charge these people? I have no idea how much it costs to prepare a tax return, right? I mean, I worked for a big public accounting firm, but I couldn't charge those rates, right? So I called H&R Block, and I pretended to be a customer, and I said, you know, and if I was going to come to you and I needed this, that, and the other thing prepared in my personal tax return, how much would you charge? And they how much they were going to be charging me. So that was something, believe it or not, that's where I started basing my fee when I first started my accounting practice. So, you know, it's try to think of some different things maybe outside the box in order for you to be able to get a little bit of a valid number. Because it's these couple of first boxes, as simple as they are going to be extremely important for your financial model. The next thing is your cost of goods sold. Again, same type of concept before. If you were units up here, it's going to carry it down and do the same thing. Again, you're only concerned about the yellow. So if you were a service company, all right, you would be actually, like it says here, you're not going to have anything at all in your cost of goods sold. Your cost of goods sold is just going to be just that, the cost of selling your product. How much is it going to cost you? All right, whether or not you're going to be a retail company and you're going to be buying that product from somebody else, or you're going to be in a manufacturing room and you're going to be actually putting it together. So you'll need your raw materials types costs within this area. Again, if you were producing units, and you had your selling price in here. Again, that's going to carry the same number of units down here to your cost of goods sold area. So all you're going to have to put in there then is just the cost of a unit. All right, so if it's going to cost you, if we envision $10, $15, and $20 as our selling price over the years, let's say it's going to be an $8, a $10, and a $15 cost of goods sold, okay, per unit. Any questions so far? And then the last step that you're really going to have to do anything with is your operating expenses. These are your fixed costs. So these are not the costs associated with the products themselves. These are you going to be renting a facility? Definitely can factor in liability insurance, right? Again, depending upon the type of entity you are, if you're not going to be a corporation, you need to make sure you have that liability insurance in there. Professional fees, you have to get a lawyer involved, right? Most times you do, even if you're going to be a partnership. You know, again, a lot of clients that start out as friends, you know, end up not being friends in the end. They always say, you know, when you go into a marriage, you're never expecting to get divorced, right? Same thing with a partnership. You're never expecting it not to be very friendly at the end. So you want to make sure you get a lawyer involved. So those are all costs that you're going to need to have to factor in. So the same type of thing. You're just going to enter in the item here. You're going to estimate the cost over here. And then believe it or not, you're done. The model's going to take you through everything except one last little piece. So the step 5, what it's going to be doing here, it's going to calculate depreciation. Now again, we took this on a very, very minimal scale, all right? We gave it all the equipment the same life, which makes it a lot easier. But what this is going to do is it's going to take your capital cost that you've estimated in the first page or the first tab and going to calculate the depreciation on that and then determine what your book value is. Again, which is just your cost minus your depreciation. Then it's going to actually carry all those pieces over here and actually have an income statement. So it's going to carry your revenue, your variable costs, your operating costs, and it's just going to put it into that one financial statement. And I really should probably change this a little bit because it's giving me a loss. That's not good, right? What did you say?
Increase your selling price.
I was going to say, all right,
Cost fixed.
let's put yes. All right. Boy, we're still really off, aren't we?
Cost per unit too. Yeah.
Yes, they are, you're right. We'll make them all 5, just to get it up.
Now.
All right, now we're a little bit better. That's fine.
So easy to make money.
That's right. Just change a couple of numbers and you know, in reality, it is a good thing because you see what you have to make or what you have to purchase at the cost that you need to purchase it at in order to be able to produce a product. So again, you're going to have to play with those numbers, play with your selling price. Make sure you have that cost of goods sold at a good number, right? And the operating costs. We have this actually just increasing at a flat rate of 5%. So those operating costs, again, are just going to be increasing a little bit every year. So this will be showing you what your net income is. From there, it's going to actually go to the third tab, which again, the only thing on this entire tab is going to be your working capital. Now, what is working capital? Anyone want to take a shot at it? Probably a little tired right now. So working capital is really just the cash that you're needing before you sell your very first product. All right? Because once you start selling that product, you're going to be generating that cash, right, going forward. But before you start selling that product, you've got to come up with some cash, right? And that's really considered your working capital. You have to purchase some inventory. You have to buy raw materials. You might have to put a deposit down on a rental facility, right? There's a whole bunch of stuff that you're going to need cash for, even to open the very first day. If you're a restaurant, when you open up your door, you're going to have cash in your drawer, right? Just in case someone pays with cash, although it's a very rare happening nowadays, but you never know. So those are all the things that you're going to have before you sell your very first product. That's what working capital is, all right? And again, we're making the assumption that you only are going to have that influx of cash the very first year. Again, we're going to make these basic assumptions, all right? So you're going to put that piece right here as far as identifying the amount of cash that you're going to need. And then again, what the model is going to do is it's going to pull it through and it's actually going to generate what your operating cash flows are, because we accountants, I see accountants out there, know, right? You have that netting, earnings before income, interest and taxes. Remember, depreciation is not a cash expenditure, right? So we have to add that back out our taxes, and that comes up with our operating cash flow. And again, from there, we're going to factor in our working capital, put in our capital expenditure from the initial outlay to get what our total cash flow would be. Again, these are very basic. Putting in the salvage as if we're selling that equipment in the third year to give you that piece of inflow back in. So now this is the area over here, which is calculating what your net present value is. And that present value is taking all those flows that you're expecting to get in those future years and discounting them back to the very first year. What you're going to do with those discounted flows is you're going to compare them against your initial investment. And if it's positive, that's all it has to be is positive, whether it's even just $1, that means that you should good to go. All right, that you've got a model that's actually going to be financially sound. If you have a negative net present value, you're going to be in trouble. All right, so you're going to have to go back and keep retweaking these things in order to come up with that positive net present value. And then down here, we just kind of put this together just as a cash reference, that this is the amount of cash that you're going to be needing over the course of the project. So when you're looking at the first year, you're going to have the two pieces. You're going to have what your initial asset purchases were, like from the very first tab. And then you're going to have that working capital piece, all that cash you need up until you open that have that first sale or open up your door. These years over here will hopefully be zero. All right, they're not going to be zero if you're operating at a negative amount. So in other words, if you don't have enough cash being generated in your current year to cover your expenses, that's going to flow through into this section right here. All right, so this will just give you like a little bit of a nutshell as far as what your cash requirements would be. Any questions? All right, like I said, so the only things you're really going to have to worry about are the yellow, all right? Otherwise, the computer model will take care of all the rest of it for you. But again, you want to be focusing on that third tab when you're talking about that net present value. And I want to just kind of throw out there too, is that, you know, I and my husband are more than willing to sit down with you if you have problems. You know, if you're working on the model and things aren't working out the way you should be, we would definitely be happy to help you. So just shoot us an email. He actually teaches at night on Thursday, so he would be willing to, if you wanted to be on, since he's on campus later, he'd definitely be willing to meet with you in the evening. I'm here more Tuesdays and Wednesdays during the day. I'd be happy to meet with you during the daytime. All right. Any questions? All right. Good luck, guys.
Thank you.
Alright guys, this is a slide that you guys have seen before. This is the judging criteria that we're going to be going by. It's on the website as well. So if you have any more questions about what you need for judging, feel free to ask us for any more details, but you can find it on the website. We've covered this already.
Yeah. Remember to bring it. Round 2. It's heating up. So mentors, we are so thankful to have 20 professionals that are going to come alongside each of your teams to enhance what you've already brought to the table. But we want to make sure that you know how valuable that is and that you really, really appreciate their time and their resources that they're giving to you. We want to make it known that a mentor, so if a mentor is feeling like, man, like I was super pumped to be a part of IVC, but at the same time, this team really isn't investing, well, we don't want them to feel like their time is wasted. And so this is, it's kind of a serious topic, right? So everybody's like, oh, wow, okay. But then like the mentor can let us know that they're not feeling like it's going both ways. Does that make sense? So we really want you to bring it. We really want you to put your best foot forward and to show your appreciation. And the best way you can do that is by really investing yourself into the venture that you're setting out to create.
And one thing to add on to that is that these mentors aren't just for this plan. These are relationships that you guys can establish with these amazing people that are professionals, that are really experienced, that are really accomplished, that can speak a lot into your lives as much as you speaking into theirs. So please work on that, build that relationship, and don't take it for granted because it's something that's so special.
So when you're going to get to know your mentor will be this week. In the first few days of this week, we'll send out emails letting you know who your mentor is and connecting them to you and you to them. And then you guys can just start interacting. You can, whether it's Skype, phone, email, or in person, we definitely recommend getting a meeting in person as soon as you can. Get together, talk about the venture, send them your concept overview, send them your questions, your ideas, and set up the expectations and go ahead.
Mentors have committed to 4 to 6 hours of working with you guys for each round that they're involved in. If you guys do not advance to the next round but would like to continue working on your project, then it's up to you and the mentors to continue talking about how to move forward. Again, this competition is a competition, so there are people that will move forward and there are people that won't. But we're here to help you guys build your businesses. We're not here to say, oh, this idea hasn't advanced and therefore it's done. No, we want you guys to build these businesses because these businesses are going to impact society. And we want to be able to help you do that. So with your mentors, you guys can continue talking even if you do not advance.
It's bigger than the competition.
It's much bigger than the competition.
All right. Any questions? How to submit to IVC. So we're doing the same thing. I start, all right? But you're going to look for round 2 submission. Everything you need to know is going to be on the resources page of impactventurechallenge.com. just like last time. Is that clear? It's everything you need. The overview that you have, the front back one pager, everything you need, we've got it on the resources page. And you'll use that to make your submission, which I think you've got 24 days.
Yeah.
24 days in a whole week where you've got no classes. You might be out of the country, but no classes. So come on, that's what we're saying. You got plenty of time. But definitely, another part of that is that reach out to us if you guys have any questions. And you guys want to sit and talk about this. That's why we're here. Anything else?
It's all.
Some important dates. April 1st, like we're saying, 24 days, all right? Midnight. Central time, though, so you got an extra hour. But round 3, right? Yeah, actually. Yeah. Round 3 decisions are going to be announced on April 9th. And then the workshop, if you make it to round 3, it's April 12th, and so on and so forth. And you can kind of see that. And we'll keep updating you on those as we progress.
And again, if you have any questions whatsoever, don't hesitate to talk to us. Don't hesitate to email us, call us if you have our numbers. We're happy to sit down with you guys and meet with you guys. We're actually planning at some point in time to have like 1 or 2 nights where we'll sit down for a couple of hours and we'll just have people come and bring their questions and bring any help that they have. So we'll let you guys know about that when that comes around. But yeah, we're excited. We're so excited about this, and we're so excited about so many of the great plans that we've seen. Oh, I can't wait to see what you guys come up with next.
Absolutely. No questions? Any questions? Woo! Yeah?